Hello investors. Over the last 2 to 3 days, the stock market was improving a bit, but in the last 48 hours, the war has escalated again. Will we see another correction from here, or will the market recover from here? It is very difficult to say. No one can predict this. Ideally, if the situation remains stable, then that would be better. So today we will talk about the current market situation because many investors have this question: has the market bottomed out now, or was this just a 2 day 3 days relief which we saw and market will correct again from here? And if recovery actually comes, how should investors behave? We will discuss all of these things today. In the market, we always see extreme emotions, either extreme optimism or extreme pessimism. If I give you an example of extreme optimism, around 1.5 2 years ago, it was entirely normal for stocks to trade at 80, 100 plus PE ratios. Narratives were framed that these are very high quality stocks. IPOs were coming continuously, and 50 to 100% listing gains had become very common. Stories were there that India is a long-term growth story. Defense, renewable energy, and railway sectors will perform well for the next 5 to 10 years. That was extreme optimism when everyone was only looking at the positive side. Now we have entered an environment of extreme pessimism. For example, a narrative is that AI will lead to massive job losses in India. Companies like TCS, Infosys will not even survive. There is a lot of uncertainty in the environment right now regarding this. What will actually happen, even I don't know. I am not an AI or IT expert. I'm just explaining the situation to you. Then there is pessimism around rupee depreciation, around FII selling, and most importantly, there is so much geopolitical tension globally right now. Everywhere you look, wars are happening. People have become so pessimistic that it feels like the world is coming to an end. So essentially, the market always moves with extreme emotions. People either become extremely bullish or extremely fearful. But you should not let these emotions affect you, because when the market is at its peak, you should stay emotionally calm and balanced. You should keep valuations in your mind. You should remind yourself that returns of the last 6 to 8 months are not reality, and at some point, a correction will come. At the same time, during a severe market correction like this, you should tell yourself that 2 to 3 years from now, the market will definitely perform well. You should not stay in extreme emotions like most people do. Yes, it is definitely difficult to maintain an unconditionally optimistic mindset. I will agree. But if you are a long-term investor, you will have to develop this mentality. It is difficult, I agree. As you can see, over the last 1.5 years, Nifty has not gone anywhere. In fact, it has corrected by around 8 to 10%. Nifty represents large cap stocks, and in small caps, the correction is even bigger. There has been a correction across the entire listed market that we know. Like, let me share this data with you. There are around 2,300 listed companies in the market with a market capitalization of more than 300 CR. In our Simpli Stocks community, we call this investable universe. This means that even though there are about 5,000, 5,500 companies in the market, practically, if you decide to invest today, you will choose from these 2,300 companies. These are the 2,300 stocks that actually matter. Now, out of these 2,300 companies, only around 350 stocks have corrected less than 15% or are still near their all-time highs. Almost 300 stocks have corrected by more than 50%. Around 750 stocks have corrected between 35 to 50%, and approximately 750 stocks have corrected between 20% to 35%. This means that out of 2,300 stocks, around 1,800 have corrected by more than 20%. This is the reality of the market, and you need to tell yourself that it is completely normal if your portfolio has also corrected. It is not a big deal. In such an environment, if you are still invested and have not panicked and exited, that itself is a very good thing. You should appreciate yourself. Now, a humble request, just before moving forward, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video, and yes, also subscribe to our channel. Now, coming back to our conversation, I was saying that you should be proud of yourself if you are still invested. I meet many investors who tell me that during the time of Harshad Mehta or during the 2008 financial crisis, their fathers or their grandfathers had invested heavily. But when such major correction came and lasted for a long time, they exited the market completely. And because of that, whatever future gains they could have made or whatever capital they could have recovered when the situation improved, they lost all of those opportunities. That is why I am saying that if you are still in the market, it is a very, very good thing. It is more than enough that you have survived this 18-month bear market. I often tell people around me that anyone who has gone through this phase can become a very good or emotionally strong and successful investor in the long term. And over the long term, they can build significant wealth. You can relate to this through the example of COVID-19 crash or when Trump announced tariffs. There was heavy drawdown at that time as well. Within just 1 or 2 months, the stock market had corrected significantly. During COVID, people feared that world was almost ending. And during the tariff period, even experts did not have answers about what was happening. But eventually, the market recovered. You need to carry that same COVID or tariff crash mindset that even though the market is correcting heavily right now, it will eventually recover and will generate strong returns. Otherwise, you will not be able to handle this level of volatility. Now, if you are able to add more funds, that is a very good thing because this is a great time to deploy capital and do bulk buying. But even if you don't have fresh funds, you can still switch your existing portfolio. You can move money out of bad holdings and allocate it to better ones. I have explained this in detail in our previous video, how you can take full advantage of a bear market by switching. I will also share its link in the description. You can watch that video and learn how to rebalance your portfolio. So in both cases, whether you have fresh capital or not, you can benefit from this correction by switching. But taking a decision at this time is very, very important. I have seen people freeze in inertia when they look at red in their portfolio. But you have to take calls on good businesses or bad businesses because valuations are very attractive right now. You can also see this through this chart. Nifty has come close to a PE of around 20. And I am marking here for you, whenever Nifty has reached around 20 PE level, there has been a strong rally. You can understand it like this: more or less point of saturation has reached. Over the past 18 months, we have seen that something or the other kept happening. Valuations have now come down to very, very low levels. People are wondering if there is anything left to sell in the market. So at some point, the geopolitical tensions from here should or will start improving, or simply the market will get used to all this uncertainty. So in the short term, things can escalate. That is possible. No one can predict that because developments are happening at a very fast pace. But the next 1 to 2 years will be good for the market. That is why you should not miss this correction as an opportunity. But in such a situation, a valid question arises: should you invest immediately or wait for a week or two? The logic for investing immediately is that market may have already bottomed out and should recover from here. The counter argument is that the war has escalated and oil and gas fields you might be seeing in the news in Qatar and Saudi Arabia are being targeted, which can keep near-term uncertainty high. So no one has the answer. But this does not mean that you cannot take an action. I will explain this with an example, how you can invest in such uncertainty. So this is a chart of COVID crash. Often you will see that during corrections, the market reacts in such a V shape or sometimes in a W shape pattern. The stock market is usually doing well. Then some negative news comes and it suddenly falls sharply. After that, it bottoms out, and from here, the recovery begins again. Now, see, if you had invested here, you would make returns in the long term. If you had bought more stocks here, you would see better returns. And if you perfectly timed the bottom, you would make returns, huge returns. And even if you bought here, you would still make returns, right? So all in all, as long as you buy the dip anywhere within this range, you will benefit from this uncertainty. See, No one can tell which stage of the correction you are in. Many times people keep waiting for the exact bottom so they can buy, but they miss out on the opportunities then. So you should plan your allocation in whatever stock you want to buy and keep buying in stages. This allocation sizing and planning is something very important to understand, and we also talk about this in our Simply Stocks community often. You should keep buying across this range. Don't wait for the bottom. Valuations are very attractive right now, and this is a very good time to use this correction to invest in bulk. But you might say that this is all very easy for me to say. My money is not invested. I mean, it is invested, but it is your money that you will be investing now, right? So when your portfolio suddenly turns minus 5% red, you are the one who bears the emotional trauma. For that, I will say that for emotional strength, you can refer to a lot of past data. For example, I am seeing nowadays a lot of content on YouTube is coming whenever that stock market has corrected by 15, 10 or whatever, 10, 15, 20% or more in the past. It has delivered around 50 to 75% returns in the next 12 months or this and that. So, or when the wars end, the market usually performs well. That data is there. So all that data is coming forward. On this, my response is, दिल बहलाने को गालिब ख्याल अच्छा है. Instead, you should learn to accept the uncertainty. For example, when people ask me, when will the war end or when will the stock market recover, my answer is that I don't know. In near term, the market may or may not recover, but eventually it will, and eventually can be an year or even 2 years away. But if you attach a personal timeline in such a situation when there is so much uncertainty, like things will improve in say 4 or 6 months, then you will not be able to handle this uncertainty. But at the same time, if you move forward with a long-term mindset, which is called the Stockdale paradox, that eventually things will turn out well, that will help you more. So how long will the situation remain uncertain? I don't have the answer. How long will the Iran-Israel-US war continue? I don't have the answer to that as well. That should be your answer as well. And right now, we are seeing that US has plans to deploy ground troops there. A full-scale invasion can happen. If that happens, the war can get even more intense. Also, as we are currently seeing, countries are targeting each other's oil and gas facilities. So the recovery we saw over the last 2 to 3 days can completely disappear, and that will not be surprising at all. That is why I am telling you that neither you nor me nor any expert can time the market. That is the first thing. At the same time, if you wait for all uncertainty to end and things to get better, you will miss the opportunities. And you cannot attach a timeline to this either, because no one truly knows when things will get better. No one has seen the future. So you need to move forward with the mindset that you will keep investing. And eventually, whenever the market recovers, you will benefit from this uncertainty. The world will continue to move forward in the long term. That should be your mindset. So that's it. I hope this video helped you in some way. And if you did not like the video earlier, please do so now. And yes, also subscribe to our channel. If you support us by liking this video and subscribing to our channel, we will be able to bring more such videos for you every week. So I will see you in the next video. Happy investing.